following is an update and technical analysis on Bitcoin, the largest component to the cryptocurrency markets based upon the 240-minute interval, in which I will additionally deep dive into the outer layers of the daily time frame and ultimately the weekly interval into some key clues that are potentially developing within some key technical pivot points and or transitioning points that I believe will increase the odds for the next major trend change within the spot price of Bitcoin. Well, we had some big headlines rock the cryptocurrency markets with the SEC officially approving a spot Bitcoin ETF after a ton of initial confusion, where various companies, including BlackRock, Grayscale, and Fidelity, have received approval for their Bitcoin ETFs, where the SEC's chairman, Gary Gensler, distanced himself from crypto, highlighting concerns about Bitcoin's speculative nature and illicit activities, where the long-awaited approval is now met with dissent from the Democratic Party, while pro-crypto SEC Commissioner Hester Peirce criticizes the agency's decade-long delay in approving the spot Bitcoin ETP, where citing a potential harms and diversion of resources. The news now coincides with a reported fee war that has broken out among ETF providers, potentially impacting the broader crypto ecosystem. And I'm going to take you out back to November, the 25th of November, 2023. We were just trading spot price 37,821, and we were banging on the door of major key resistance off the 37,890 price resistance, with major reactionary highs really across the entire sphere here, with potential false breakout and or rejection. This was a key transitioning point where we had a clean negative and bearish divergences constructing on all four key technical momentum indicators, increasing the potential odds of a pullback to come, where I had made it adamantly clear that if long traders and or bull traders were to put in a solid 240-minute infused candle close breakout above the 37,890 price resistance, that would increase the odds of some of these negative bearish divergences potentially being challenged and or burned out on a prolonged move, if and when, if proved sustained, taking some stops below, would issue in a much larger squeeze and rally, ultimately taking out some more shorts out of the pool. Whereas short sellers and or bear traders, they needed to defend this key price resistance level of 37.8090 really at all costs to avert any further technical damage amongst the trade of the short trade side setup and or trade idea on a prolonged move right back down to the primary reactionary uptrend line. And here's the update. Long traders and or bull traders completely took the level out, which coincides with the 50% fibs retracement here on the 240-minute interval. And this was the big key inflection point to really watch, and ultimately having a snapback and or counter trend rally based upon this primary reactionary uptrend line with multiple major reactionary lows to now strengthen the validity of this key pivot point. And they took this level out with conviction completely. Multiple candle closes, solid 240-minute green candle closes, breakout above this key inflection point, ultimately beginning the scale and out process for your short on a stop trade setup, only to be followed by further consolidation and a much larger move, sustained rally, completely squeezing out the rest of these shorts to the upside, and the entirety of that trade up to the big move to the upside was netted almost 30% in gains. And I believe we've reached an additional key transitioning point based upon the 47,105 price resistance. I have it color coded tan, which is in high correlation of the outer layers of the weekly interval, and that has been rejected multiple times now here off the 240-minute time frame on a potential triple top if and when we go on to re-challenge the minor 45,641 price support, which will be in confluence of this primary reactionary uptrend line with the additional 240-50 moving average. And that will be a very key transitioning point if and when we go on to retest that key inflection point. It has been defended multiple times here on 240-minute timeframes, and it has been successfully bid by long traders and or bull traders. Short sellers, they want to see a solid 240-minute solid candle close below this key inflection point, issuing in what you would call a 240-minute interval sell signal for a prolonged move and or retest, backtest of the challenge, re-challenging of the minor uptrend line, which would offer an additional aggressive, great risk reward short trade setup to the downside. Call it off a dual price resistance level of the 45,641 price resistance. And that would be on a re-challenging of the 236 fibs retracement, call it 43,646 price support, synchronizing with the 240-200 moving average. So that is a big monumental inflection point. Long traders, bull traders, they want to defend this key inflection point, minor uptrend line, really at all costs, to go on to re-challenge the 47,105 big price resistance. And I'm going to get to that in a second off the outer layers of the weekly time frame. Long traders, bull traders put in a solid 240-minute infused candle close, similar to what we had back in November. That would, in my opinion, set off stops and have short sellers continue to think twice about shorting what has just been this improved for big institutions to have massive inflows into the ETFs of Bitcoin. And that would, in my opinion, increase the odds for potential rechallenging of the zero fibs retracement, 48,923 price resistance, an additional unfilled gap up to the 53,000 price range. And upon taking you out to the weekly interval, the much larger picture to the cryptocurrency markets based upon this primary reactionary uptrend line off the 2013, call it almost a full decade of price support here, and that has been defended heavily each and every time we've come up around this key transitioning point. A decade-long primary uptrend line where we are making a series of higher highs and higher lows. And upon zooming you in right to the 47,105 price resistance, which cuts through a series of wicks of major reactionary highs and lows, and I believe this is the ultimate line in the sand, big monumental inflection point, if and when taken out on a solid weekly infused green candle close up, a breakout above, would again increase the odds for rechallenging of those negative and bearish divergences on multiple indicators within the daily and 240-minute time frame on a burnout, where an ultimate move on a huge short squeeze setup on a rechallenging of the major reactionary highs of 2021 would prove to be threatened with a vast amount of FOMO traders and or long traders gaining in to succeed in carrying profits to the upside. Short sellers, this is an ultimate great risk reward ratio, giving you the most valuable short trade setup to the downside to rechallenge the 50 exponential moving average, call it the 41,597, and additional big move to the downside to rechallenge the primary reactionary uptrend line off the 2013 lows, which would take you right around the 33,000 range, and the entirety of that drop, if revisiting back to the primary uptrend line, would be good for a 30% crash to the downside, ultimately retracing that entire big move off that big resistance level that was taken out with conviction. And what will be so significant is a ton of moving average support down below, with the 50 and 200 weekly moving average tightly in concealment of additional evidence to back just a triple transitioning point of price support. Make no mistake about it, there is health being poured back into the technical momentum indicators here on the weekly time frame, and that again increases some potential odds if and when we take this level out would only strengthen the validation of more additional health being poured into the momentum indicators. Zooming you into the daily time frame, and I have this primary reactionary uptrend line, call it multi-year price support off the November 2022 reactionary lows, and that is a big key transition point. Here we are trading amongst the 47,105 price resistance, which is the additional weekly interval price support level. I have an inverted parabolic uptrend line here with major reactionary lows really across the entire sphere here, which will be in correlation of the 50-day moving average, call it a dual transitioning point, with additional price support amongst the 240-minute interval off the 236 fibs retracement. Well, if you go back and you measure around this key range, you're looking at the 43,000, 42,000 range, and upon zooming you in, that is right the line in the sand of the 236 fibs retracement and this primary reactionary uptrend line. That would issue an additional breakdown sell signal if taken out on a solid red candle close breakdown below on a potential backtest and or retest if and when we even go on to take out this minor reactionary uptrend line. Long traders, bull traders, if and when we go on to re-challenge and take out the 4530 price support, which has been deflected and defended heavily by long traders and bull traders multiple days in a row here. What was so bullish about the forthcoming move here was this beautiful, well-defined, rising three-method bullish continuation pattern, and that has a strength and validity of a potential increasing the odds for more upside to come, and an additional flurry to challenge new all-time highs. Make no mistake about it, the near-term risk-reward ratio lies heavily to the downside, opening up a short trade position with additional stops up above and a scaling out process if and when some of these key transitioning points are taken out. The first target down to the 50-day moving average in correlation of the inverted parabolic uptrend line would be good for a 6.3% drop down to the 236 fibs retracement if undercut for an 11.5% crash, and then ultimately the 382 fibs retracement for a 17% crash down to the 50% fibs retracement for a 24% crash, and then ultimately a revisiting of the 618 fibs retracement for a 28% crash in confluence of the primary reactionary uptrend line, which would need to be held really at all costs, which would come with the greatest inflection point that we have seen in Bitcoin for years on end now. Call it a multi-year price support level that would need to be defended heavily at all costs. And in the near term, we have a sustained momentum in the negative and bearish divergences that have constructed on all four technical momentum indicators upon going back to the 240-minute interval, and they have just been continuing to construct and establish on all four technical momentum indicators. And we have been hyping up this key inflection point of how these divergences just continue to construct and establish on all four indicators, only increasing additional odds for a much larger drop to come if and when some of these key sell signals and or transitioning support levels are taken out with conviction.